Ride-sharing app Lyft filing for its long-awaited IPO today. It is expected to be one of the first tech unicorns in a packed class of 2019 public offerings, which could give the future stock a jump start. Let's get to Leslie Picker back at headquarters with the details. Hey, Leslie.
Hey, Melissa. For Lyft, being first, well, at least before Uber, may be best. There can be a significant first-mover advantage when it comes to IPOs of similar businesses. For one, Lyft will be the first one to tell its story. It will be the company that sells the market on how a ride-sharing business should be valued, and its post-IPO performance could help support or alter or deter the plans of other IPOs coming down the pike. There are several recent examples of this. Years ago, Box and Dropbox were both quietly preparing their respective offerings. Box went public first. The stock soared on day one, going from $14 to $23 a share. But a year later, the stock traded around $10, and it was another 3 years before Dropbox was able to debut. Another example is Fitbit and Jawbone. Each company had a multi-billion-dollar valuation in 2014, but Fitbit went public first. We all know how this ends. A few years later, Jawbone liquidated. Now, it's worth noting that just like Lyft, both Box and Fitbit were the smaller company. They had smaller private valuations than Dropbox and Jawbone before their IPOs. That said, Uber has already confidentially filed its S-1. The company is going public, but it's hard to ignore the impact that Lyft's deal could have on its larger rival. If Lyft's shares plummet after the IPO, some investors may not be willing to try their luck on another ride-sharing IPO, despite the differences between the two businesses. Now, if it does well, that could cause investors to pull money from Lyft, reallocate toward Uber, which could cause Lyft's shares to decline, Melissa.
All right, Leslie, thank you. Leslie Picker at headquarters. Leslie had mentioned the differences between the two businesses. One big difference is the operational geography of the two businesses. Lyft is primarily U.S. and Canada. Uber has 70 countries around the world. And also the businesses, Lyft is much more pure play. Uber's got Uber Eats and Freight and all sorts of other things.
Yeah, I think if you look at that slate that you just showed up there of all these expected IPOs this year, this is a really good one to come first. It's going to get investors kind of focused on a company that has obviously been transformative, but is, like you said, a pure play on the U.S. ride-hailing market right here. Who knows about valuation, but a lot of the data in that S1 today looked pretty good. They've made some pretty good improvements over the last year, and now they're butting up against 40% market share here in the U.S. So I think it's going to be a really popular hedge fund trade, long Lyft, short Uber, when Uber finally gets out as some sort of collapse of the spread between the two.
Is that on a valuation thing, or Uber is sort of seen as the,
I'm saying
evil empire?
As the far-off number two taking market share in the U.S., it's very focused on the ride-hailing market as a pure play, and we'll know in 6-7 months or so.
I think the size of the shares or the size of the money they're raising, essentially, they're raising $100 million. This is not a lot of money relative
but
to where I think
that's not what they're going to raise, right?
Well, I mean, what I'm seeing here is that they're going to start out with that.
File that and.
Okay, so in terms of size, though, I do think coming first, and this will be, I believe, a significantly smaller deal than Uber, and that's very bullish. Ultimately, there's still a scarcity effect. It still is that pure play. I think it's going to set a proper tone, and I think people have been waiting so long for these deals. Nobody's rushed into this. Neither one of these companies. There's an argument that Lyft is bleeding money, and they've lost, 1.5 times more than they did last year. Those are the numbers. They also doubled revenue. So these are growth companies at a time people have been paying up for these deals. We've been talking about essentially that second wave of growth.coms that have come through in the last 15 months as being the ones that have outperformed everything else in the market over the last year, and I would expect you're going to see the same thing.
So even the growth area, even if the growth areas like the FANG stocks are not performing well relative to the broader markets, and it's a value trade that's more in favor right now, these particular growth stocks should do well?
Well, I'm not certain. I don't know how to answer that question, but I will tell you is if the IPO market is opening up with Lyft, with Uber, with some of these companies, where would the first place I would go? I'd go back to the exchanges. Now, the NASDAQ is traded from 95 down to 80, bounced back to 91 now. They report, I think, in the middle of April, 16.5 times forward earnings. I'd rather be in a understanding, I have no idea where these are going to list. I'd rather be in an exchange right now. And by the way, I was a Lyft driver.
That's right. That is right.
And what I read in the prospectus is apparently these Lyft people are giving stock to drivers.
What are you going to do?
That's documented.
You can take stock, or I believe cash.
I'll take stock.
Nice hat, dude.
You like the gloves?
The gloves.
Is that uniform? Is that like
no, it's my
company
uniform,
issue?
No, it's not company issue.
I
thought I wanted to look good. It's swizzle issue.
Are those blue blockers?
Pardon me?